So just a little bit of a question on the room while they get the slides up. I am going to be talking about the future of banking specifically, but just to get a sense of the size in the room, how many banks are in the room? Show of hands, how many banks are in the room? Wonderful. How many would describe themselves as a challenger bank? Ooh, no one. Being a little bit conservative there. And of course, fintechs, so providers, tech providers who are looking to come through. Okay. What I'm actually going to be talking about here is a little bit of the message that I sort of work through and give to the bank. I'm a partner at Deloitte in financial services technology originally. But before I joined Deloitte, I was a board member of one of the world's largest bank. And now I'm here in London. Now I'm here in Netherlands based, but also across Europe. I'm also working with boards and continuing that discussion with boards about how they spend their money. So I've been working with banks since 2024 around how do they prioritize their investment, what is sitting in the buckets of the various pots that they have on the table. And over the past 3 weeks and continuing, we already started discussions with banks on where they're going to spend their money in 2027. So what I'm going to do in my slides is I am actually going to give you a point of view on the future of banking, but give you a little bit of a window in terms of what's already in the minds of boards, and what equally is where they're going to be spending money in 2027. And it's not always where you think it's going to be. It's a blend of tier 1 to 2 banks, and a couple of things coming in here is going to come in from fintechs. And some of the work that Deloitte is doing at the leadership level of some of the fintech companies and some of the challenger banks as well. The slides are really more talking towards banks and being more innovative in the way they think about structuring banks going forward. It is not based on theory. It's actually based on banks who already started this journey, and really to give you a sense of what more we're expecting to see from those banks. So before we go into the slides themselves, we touched on how many people here in banks. A couple of things that's coming through early in those board sessions is what do the customers really want? So boards are asking the question, what do the customers really want? Which customer groups do I care the most about? So who has the biggest margin and therefore is worth the investment? Which elements of my customer base has smaller margins and I see as maybe a utility and therefore may not necessarily want to invest as much in my pot? It will talk about risk and reward. So when they are looking at fintechs, Lauren spoke really clearly around the challenges of fintechs. Lauren's interestingly put 6 providers on there. I imagine you have 200 plus in your pool, and imagine 6 got through. That is the challenges and the stickiness of coming into banks and trying to get into that 6. That's the kind of throughput that you're fighting against. I will share a little bit about why that's the case, why the board doesn't have, what attention is needed to grab the boards, and how to tell the story to the boards. But equally, some places that fintechs are playing that are adjacent to banking that we're seeing a little bit more of a shift towards rather than trying to be part of a pool of 200. Yeah? So even though my slides are going to talk about banking per se, it's really going to for the fintechs in the room, think of it from the reverse side around what do I need to do to address this market. Yeah. Boards themselves are very aware of the problems. They know they're slow. They know they have to do something quicker. They know that AI is here. We heard a lot about it. They get it. They understand it. But those are the fundamental challenge, risk, reward, build versus buy is coming in really, really high on the boards. Do I go out there and bring in a fintech that is going to deliver my solution, or do I buy a challenger bank who's already had that journey? Which is a quicker time to market for me? So banks who have very strong balance sheets, which play do I make? Because have a challenger bank brought in that ecosystem of technology, already grew, they're operating in a regulated environment, and is it simpler to buy a challenger bank? So some of those discussions are happening at board level, rather than go through that journey with fintechs. Not to say that's not happening, by the way. There's still a lot of great, exciting things coming in through, so watch out for those. In terms of investment in 2027, is categorized into 3 pots. This is consistent across all the tiers of banks we're speaking to. Investment to grow, investment to operate, and investment to secure. So where they're looking at AI, for example, which of my business problems and which of the pots do I put that funding in? So this is talking a little bit about some of the things they're thinking about, platform ecosystem. I'm going to open up what that means in terms of shift towards bank as an orchestrator versus bank as this very large traditional house of technology. I think some of the speakers talked about that, what that model looks like and where the banks are seeing that evolution shifting towards. AI, of course, is playing a big role there. I'll talk a little bit more about AI specifically in the role of the bank as an orchestrator and what that operating model could look like with AI enabling it. And we are going to talk a lot about, as well, digital trust. Because digital trust remains a key challenge. This is back into secure and actually securing themselves. In terms of challenges, I think everybody touched on these challenges in the earlier session. I'm not going to go through them, but I'm just going to give you a sense if the incumbent banks is on the left-hand side, your left-hand side, they understand platform powerhouses. They understand challenges. They understand what that brings them. The question that they have is, which space is really busy in terms of the product and services that are being provided by fintech organization, and which are still some of the white spaces of where they need services that are not as busy. So, for example, if I look, so some of the discussions on mapping that they're asking us to do is around the platform powerhouses. We're hearing a lot about various solutions that are coming out there, but which customer base are you targeting? Are you targeting retail customers where the margins are small? Do they really want to invest a lot of funds into retail banking? Or are they looking for absolutely real-time solutions for their corporate customers? Not very many players are playing in that space. Wealth, specifically, is another area that they're very, very interested in hearing about. And on the other side, they have the more commoditized business banking and business banking portfolios and the various customers that coming into that space. In terms of margins, business banking and above, particularly wealth, private banking for the large players, is where the money is. And that's where they are looking to invest. Retail banking, quite a fickle group of people. It's very difficult to track and maintain what they want, and do they necessarily need to chase that market? If you take a step back to 3-4 years ago, reduction of branches. They were already trying to divest their interaction with retail customers. For large banks, and I'm speaking as a banker myself, any asset holdings or people who use the bank for more transactions under 100K is actually not necessarily as profitable as a grouping of people that are much, much higher. and therefore they want to invest to retain those customers. They don't want to lose them, they want to retain them. The customers underneath that, a lot of it was self-service. So more self-service, absolutely. They very much understand the role of disruptors coming in from the UK. Revolut, of course, did a lot of erosion into retail banking. What surprised me was how it was concerning to the big banks. Did they worry about it, per se? Their view was, this is a group, you know, they will come back to us when it comes to mortgages, for example. So do you really want that group of people that Revolut has taken? Are we concerned about it? Certainly we they have a threshold percentage, by the way. If they hit that threshold, then they get incredibly worried. But that threshold, Revolut impact into UK banking didn't actually hit that threshold. And it was around the fundamental point of trust. So when they did a lot of conversations with their clients and look at why they switched and why they remained, trust came up quite high. Do you trust a new incumbent? You will always get early adopters, and you will tend to get early adopters in a younger group. But if you're in your 30s and your 40s and you have a net worth of over $1 million plus, do you necessarily want a service? Yes, you want real time, you want cross-border real-time transactions, etc. But do you necessarily want some of the services that are being provided at that level? Because at which point you're in private banking anyway. And you have a different grouping of services as permitted for banking service. So it's just to give a sense of the balance of the discussions that happen. So those then play out when it comes to where they allocate the funding. One thing that's coming in really heavily in terms of investment in 2027 so far is sovereignty. Particularly sovereign cloud for Europe, driven by regulation, is coming in at currently 10% of allocation that they're putting. That is a huge amount into transformation, ideation, proof of value around sovereignty. The other bucket that's coming in there is around fraud prevention. Of course, that's maintaining banking license. And on the left-hand side, I would say, in total, this amounts for 70% of where they're going to be putting their funds on that side. This is about running the bank, not necessarily, and some change the bank, but change the bank around maintaining the status quo. So, whilst it sounds pessimistic, it's also an interesting inflection that we're seeing as well in the marketplace. So the next slide actually talks to what choices do they have. So they talk about incumbent banks and they talk about challenger banks. So we understand the challenges of incumbent banks. Challenger banks themselves, an interesting phenomenon that we're starting to see is challenger banks starting to consolidate themselves. We're also seeing fintechs, starting to see some of the fintechs starting to form an ecosystem amongst services that gives a little bit more of a 360 support view for a bank. Those are some of the key things that the banks are also tracking, and whether at which point or evolution in a challenger bank would they be prime to actually consider buying. So some fintech players are playing with the challenger banks that are proving the concept to very large incumbent banks, and whether that is one of the play. Now, I'm speaking very much about tier 1 banks here, and some tier 2 banks, but of course there are domestic banks that are still playing in the space. They're still looking at competing. So some of the challenger banks I'm looking at, some of the traditional banks I'm speaking with are actually more in the compete, and that's still part of their board decision. What do I buy? What tech do I buy? They're still having that dated conversation. The If I am, so in my role at Deloitte, I'm not just supporting banks, tier 1 to 3, I'm also supporting foreign banks that are entering, and that include digital assets, that are entering the Dutch market. Does anybody want to hazard a guess at how many foreign banks are here in Netherlands? 50? Any more than 50?
Probably even 100 or more.
Yeah.
All of them are here.
I can tell you that you're absolutely right. There is actually 102, and 4 months ago, there were 60. Within the last few months, this is the amount of foreign banks that are based here. They're based behind no branding within the semicircle of Amsterdam. They're operating behind closed doors. They're landed here. They're coming in from Asia, primarily. There's quite a few. There's 6 Chinese banks that are here. There's a grouping of Japanese banks that are here. And a growing number of Turkish banks that are already here, that are now stepping into, and one particular Asian bank is set to become the 5th largest bank in Netherlands. I shan't tell you who they are. It's an Asian bank. But they're competing, and they're set to become the 5th largest bank in the Netherlands. And we're supporting them with that journey. So when I speak to the foreign banks that we're supporting, how many of these discussions are happening with them? None. Less than 1%. Because I don't think that a lot of organizations know that they're physically here. And they need help, and they come with money, and they're really looking to integrate into the Netherlands. So an interesting space to play in. The other interesting space specifically, and I'll move on a little bit quicker, is that in the fintech space, and banks boards are very much aware of this, is that existing platform holders are also innovating. ServiceNow is pushing out, 10 new releases with brand new capabilities coming in that is encroaching very, very, very quickly into the fintech space. And they've taken a risk. They have existing relationships with the bank. So it's an easier sell to the banks to say it's easier to take additional ServiceNow modules that's got AI in all of them, because every new release of ServiceNow coming in from Brazil onwards will have AI components, AI-enabled components. And they will put they, by the way, came out with AI control, so you can see where all their agents are, and you can control it. So that brings in the secure space. So they're looking at grow, operate, and secure. They're playing across all 3 places. So the interesting space that I'm seeing, particularly in the US, and in US banking, is where the fintechs are working with the big players to form an ecosystem so they could go into banks. And by osmosis, it's working through and coming into banks, but not directly. It's coming in via the big platform holders. And in some cases, they're white labeling. Yeah. So the 3 things I'm going to touch on, and this is about the future of banking. These slides are targeted at the banking sector primarily, is about bank as an orchestrator. So on the flip side, we talk about what role should banks play? I'm not going to touch too much on AI adoption because it's been talked about quite a lot, so I'm not going to give it much airtime. But also, I'm going to touch a little bit more on digital trust and the value that digital trust is actually going to bring. In terms of bank as an orchestrator, we touched on, and I mentioned this earlier, CEOs are saying, I am a bank as a core capability. Do I need a tech function? I know I need a security function, but how much of this could somebody do much quicker, much slicker? We're starting to see CISO as a service coming in as an MSP. We're having tech, various banks here, I'm sure a lot of your tech is actually outsourced to various players. So some of that is coming into the bank of starting to make the step into the bank as being an orchestrator. And I'll show you pictorially what a bank as an orchestrator look like. And then we're going to touch a little bit about AI adoption, but I'm going to focus not on AI adoption. I think everyone knows that banks are doing AI adoption today, but it's really more about, in a bank of an orchestrator model, how does AI enable that? And digital trust, I think, is really the core fundamental of a bank keeping themselves secure. It's against fraud, it's against platform as a trust, it's bringing in the digital euro, bringing in IDAS, etc. All the things that the banks must do to maintain a bank license and grow. Okay. So this is starting in, and I'm going to build this a little bit. This is bank as an orchestrator. This is where the conversations we're having with the bank is saying, okay, one thing is continuing, doing what you're doing. Okay, thank you. So one thing is moving at that particular pace. The other is, what should I retain if I am a bank as an orchestrator? What fundamental capability inside the inner circle must I have? What are my core assets? What are risk and compliance, and what are controls? If I do nothing else, what must I retain within my organization if I am to take the role of bank as an orchestrator? Sitting surrounding that, and we touched a lot about the digital trust, we talked about security as a moat. What should I maintain on the inside that secures myself as a bank, secures my banking license, and maintains that trust with organizations? But this is ultimately the bank as an orchestrator. We've spoken to very many companies that are sitting on the outer circle. And what we're actually seeing, and we're expecting to see, is much more bubbles coming in on the outside. So 2026 and 2027, 28, we're expecting to see much more things coming in the outside. So the question back to banks about how should they evolve, focus on the inside, getting a core part of your bank running, making sure you secure your parameters, but experiment a lot more. There are examples. We heard ABN AMRO is in there, of course, with Tiki, of course. The Boot is also in there that are playing in payments, wallets, merchant service places. I can name banks in every quadrant. On the top two, we're seeing a lot more Asian banks playing rather than European banks, particularly on robo-advice, wealth. There's a lot more wealth investment coming in from Asian banks and Asian fintechs. So something to watch out for. They're starting to arrive at in Europe and starting to focus on some of the other sectors that we brought through. I'm not going to talk about AI native. Like I said, everybody understands the speed, what it does, augmented humans, decision fabric, using it as a decision maker. But of course, AI to secure. AI to secure is where prioritization is actually given to fintechs coming through. And that is a higher percentage of investment coming into banks at the moment. So it's AI to secure. Where previous years it was AI to grow, it's AI to secure. Okay. And I'm being pushed to end. So I'm just going to really quickly run through this. So this is about if you are to build AI into an orchestrate model, this is what it looks like. Digital trust. Again, this is where a lot of investment is coming into this year. This is where banks are ring-fencing funds. So for any banking security fintechs in the room, ring-fence money put by for this. Just to give you a sense of where they are today and where they're heading. On a scale of 1 to 5, where banks are compliant and proactive, we're starting to see most European banks in this space. They want to get to a 4 and 5, and they want support to be able to do that. And those are the really winning points. And these are just some examples here, and I'll end here because I'm being pushed to do that. Yes. If you want to hear more, I could come to your bank or have a separate conversation with you about how you build this. We have a step-by-step guide to banks. We're working with banks around how do you build bank to orchestrate.